Hello, this is Steve Malone with Compass FX. Question I got today was, why is the market not following the direction of divergence? Long story short, really what truly matters in the marketplace is price. Price is king. Also, if price has positive expectations behind it, we're going to see the market press higher. If price action is falling and there's negative expectations related to it, well, we're going to see the price continue to push lower. Remember that divergence is an expectation in the marketplace because we're seeing a shift in the market, a slight shift in the market in favor of the opposing direction. For those of you not familiar with divergence, it's simply this. Price is moving one direction while the indicator that you're looking at, in this case the Traders Dynamic Index Pro, suggesting a downward action. Now, granted, there are going to be times that the divergence, you're going to get a follow through that divergence. We can see here we're getting divergence signals, this bearish divergence coming in, and the market does come down a bit. But the market presses back up. We get another divergence indication, and we do fall back over, but only so far. And then we get another push back up. You can see what's happening here is we're literally in an upward channel. We have higher lows, at the same time we got higher highs coming in right here, and we've got this upward channel, and the market's going to continue pressing higher. We probably have buyers down here. They're looking for a press all the way up to 75 level because of the positive comments from the RBA and positive expectations in the Aussie economy. Therefore, we'll see the market press back up. Well, when do you go short then, may be the next question. Well, the key to trading divergence is to see the follow through in price to take out, in this case, the previous low. So as I trade with divergence, I'm looking at slight moves back down, but I'm looking for channel development. Here we went up to a high point, we rattled around, a little correction in this phase, and then we move into a channel, an upward channel. We get these higher lows, and they're continuing to press higher. If I'm looking for the fade, well, it's got to take out this previous low. And then if it's going to continue, it's got to take out that previous low. And guess who is probably sitting in the market at these levels? That's right. You probably have buy limits representing institutional buyers looking to buy in at a better price because they're interested in the positive expectation to see the Aussie dollar move up higher. So when it comes to trading divergence, just because the indicator suggests that the market should roll over now, that's not necessarily the case. Divergence here, using this indicator, is an indication that trading activity in the upward direction is slowing down. We're seeing a bit more selling coming into the marketplace, and sentiment is shifting from a strong upward direction. It's selling back down into its normal range here. As a matter of fact, if you see that sentiment settles down to a neutral level with the Traders Dynamic Index right around the 50 level, and you see that price starts to just go sideways, then look for the market to continue moving in the direction of the prevailing trend, in this case to the upside. Now let's look at it in the opposite direction. In the Euro Aussie, because of the RBA announcement, we saw a very strong move down. Again, the RBA leaving rates unchanged at 1.75%. With this, we got a big drop down, and then we got this continual move down. Now, we did have a lot of bullish divergence step in, but it never overcame this initial move down. So some in the marketplace were looking for a bounce and a rally back to the upside. Well, that's not going to happen as long as we have lower highs and lower lows. So we get these lower highs coming across, and we have these lower lows, even though we've got all of this bullish divergence coming in. Again, price is what matters here. Price is king. Be aware that the divergence did come into play. We moved up a little bit. The market did move up, come back into that level of congestion. The market fell back over. Then it pushed back up again, but it couldn't take out the previous high. So if I'm going to trade a rally based upon the divergence that I see here, I need to see it take out that previous high. Then I need to see it take out that previous high. So I could trade it from level to level. Now guess who's probably sitting there? That's right. You probably have sellers sitting here looking for a press down. As a matter of fact, some have commented, might see the Euro Aussie push on down towards the 150 level. Should the Aussie dollar press on up to 75 and possibly on to 76. So you want to be looking for that. So again, divergence is an expectation in the marketplace because if trading activity is starting to shift in the other direction. But just be aware, if there's positive expectations, we're going to see price continue to press higher. If there's negative expectations given that currency pair, we're going to see price continue to trend lower. So do yourself a favor. The next time you're involved in a divergence scenario, look for, if we're trading lower and you have all this bullish divergence, look for lower lows and lower highs to form a downward channel. On the flip side, if you have divergence indicating, negative divergence indicating a fall back over off of a high, look for a channel setup as well. If you've got higher lows and higher highs, you got to wait for the market to really break that channel in order to trade the fade or the reverse back down. That's trading divergence. Unless you're trading inside the channel, from the top of the channel, when you get a divergence indication, trade it back down towards the bottom of the channel as you're inside that channel. Again, if everything moves back to middle with this Traders Dynamic Index Pro, and I know that many of you listening to me right now have the Traders Dynamic Index Pro, when it gets back to neutral, back to this 50 level, and price just goes flat and does nothing, then look for price to continue in the direction of the prevailing trend. Well, this is a quick video about how to trade divergence. And again, what really matters, bottom line, is price and those positive or negative expectations related to price in the market.